Let's get a sound check. Volume seems a little low. Stand by, please. Okay, good enough. So, cheers to what has been a heck of a few trading sessions, retail trading team. This is your routine briefing. Unexpectedly, I had to go out of town for a little bit, so I apologize for missing yesterday. I wish I'd missed it in the trading world. Barb did not have the best day yet. I'm going to be consistent here, barring no emergency situations. As I am out of office, I'm going to keep these things going for you, and I hope that you will still find value. It's going to be pretty much the same thing. Only difference is anybody who comes and hangs out on Twitch, we're going to have to table the DJ sets, which your ears will probably appreciate for a little bit until I'm back in town. So I'm going to reach out to a couple of you individually, some of you more reliable folk, and yeah. So we're just going to conduct business as normal, and it's gonna be a fun time as always. So let's begin today's video by analyzing the latest warm-up. I will check everything after to make sure there are no sound issues. In fact, let me see if my yapping can be heard here. Yeah, so I apologize if volume is low. Please let me know if you are noticing some volume issues, and I will try to correct those in off hours, and hopefully that will be beneficial to you. So let me just adjust the screen here. Great. So I have my OBS up just to make sure um, I'm not on my computer that I'm comfortable with. Well, I mean, I guess I'm comfortable with this computer. Just it's not the system for the various routine trader events. So we're gonna it's still gonna work though. So let's start with just checking out what happened in the warm up today. So actually, no, I'm gonna plug my tweet because uh, why not be a little self-aggrandizing? Is that the term? So what happened this weekend? So if anybody who was on the Twitterverse just hanging out this weekend, you saw plenty of hysteria, plenty of doom scrolling. The world's ending, the banks are crashing, so on and so forth, and that didn't happen. So I posted this on Saturday when I saw Bill Ackman's CVS receipt of a tweet. I'm not even going to show you because I don't even want to click on his profile. And you know, Bill Ackman's always a tell. If there's anyone who you should follow, and besides Kramer, obviously, and just fade, that's going to be our friend Bill Ackman. So, and you know, in all seriousness, I don't actually trade off of other people's opinions ever, but you just saw what was going on Friday. So I just want to just kind of show you this because I think it's a good teaching lesson just in general for uh, if you want to use a crystal ball to guess what's going to happen when you have these significant events hanging around. You saw the tape Friday. This is not capitulation tape. In fact, Barb was also a loser on Friday. Pretty bad day again for her because you had those stop runs. You had a significant amount of buying in the market, and you didn't have any of that follow through. And then you saw it in the VIX. So the VIX, those are just my pretty trend lines. Those are going to be different. But the whole point is you saw the big spike and you just saw volatility start to peter out toward the end of the day. What happened on Sunday night? We had the gap up. I know that we sold back down. Yet really, I think that was just trapping. And you saw that continuation through the day yesterday. Day ended green. I think, or slightly red, whatever. And now you look at today, and we're up at the moment 77 points off of really a nothing burger of a CPI number. And yeah, so just the lesson is follow the tape and fade the Twitter. So the more bearish we get, the more bullish the resolution usually, and then vice versa on the other side. So I just wanted to brag a little bit there to the two of you who might be watching, and so that's what that tweet is. I'll probably leave that pinned forever, um, you know, because why not? At least leave it pinned until the next relevant briefing. Sorry, I got sidetracked here. I'm trying to check my see what's going on here. Okay, I'm just getting my chat up in the YouTube itself. So, oh, here's Ernie. Hey, Ernie. Yeah, sorry for it's going to be a little bit convoluted. I don't know if you were here in the beginning. I'm was unexpectedly had to leave town, so I don't have I'm not super organized. But yeah, I bet you appreciated that tweet as we were talking on um, whatever whatever day that was. Anyways, so let's move this. So just moving forward, I'll see your chat if you say anything in the chat here, Ernie. So I'll interact. I appreciate you viewing. Yes, I'm late, but I think I get an excuse because A, I've been on time for a while now, and B, yeah, I am not not in office to say the least. So okay. So moving forward onto the relevant things and enough talk about myself and various other time-wasting activities. So you're seeing it. You saw the first 30. It was technically an open auction. Uh, I know, man. um, I know it was an open auction. It would have been a totally different story if government didn't step in. Oh, 100%. Yeah. Yeah, it was, but you just knew that the government was going to bail them out because that is the trend. We don't learn from our mistakes, and so we're going to continue kicking that can down the road. I know I'm not going to have Social Security, Mr. Ernie, but it seems that they're really determined not to enable that for you either. So definitely better to hedge longer positions and get crushed 100%. Could have definitely gone differently. I do not think we're out of the woods as we'll see as we move on to this briefing. Just looking at the various price action, and yeah, we'll go to there. We'll go from there. I'm bloviating quite a bit here, so just that's the warm up document. Again, that open was not the most bullish per se, but you saw the trend. If you look at it on a 15-minute chart, it's as my friend OJ would say, a stairway to heaven. And so I'm calling that a trend there. Narrow IBR kind of confirms that for me, and we'll be watching that the rest of the day as we look at the other various important parts of this chart. So by the way, if this is your first time viewing, hopefully not, because I I have not been too on track here, but if it is, I appreciate you hanging out, and you can find this document as well as all the other resources in the description of the video here. So you can see our levels today. Those are our key levels, which correlate to this routine day trading spreadsheet. Right now, I'm very focused on getting this future strategy up to par, and that everything I do here is going to come from Barb, and you can follow along on this tab here to see how Barb performs, and then if you want to see just kind of extrapolating the data out, it's called results-based assumption forecast. I got it from Mark Minervini. Specifically, I got this from some legend on Reddit, and this is how we kind of keep track and project what's going to happen in the future. So that's Barb. I do have an update on Barb for anyone who has been following along, thanks to our good friend OJ as well. He talked to me and introduced me to the concept of polynomials, something as a journalism major, I have not heard about in many years. But long story short, is he figured out that there's a sweet spot for adding. So the way that I was doing it is I was enter the position with one contract and then add every n. Well, if you break it down, I'm not even going to try to explain this with words, but if you can kind of put it on paper. So let's just say we're at 4,000. If you draw it out 4,000 and you do it, let's say n is 5, just to keep it simple, in 5-point increments, you bring it out to, let's say, 40 Lagrange. Yeah, you extrapolate it out. How many times we use extrapolate this briefing? Anyways, every 5 points. So you have, let's say, strategy A is what Barb was. where you're entering with one contract and adding every N. And then strategy B would be you enter with two contracts and you don't add until you kind of start seeing that exponential growth in the points. And what's really interesting is, so let's not even use 5. Let's use today for today specifically. So today N is 13.5, and if you do that cool little thought experiment, starting with adding 2 at the beginning, and you don't add until that exponential growth kind of starts to come into effect, you're not adding until 20. So the way that Barb was performing was you would already have 4 contracts by that 20 point, yet whenever you'd have a pullback you'd get hurt, and very often the position would actually turn red. Even if you had gotten 20 points in your favor, it turned back against you and you would be net negative on the position. So that's a cool thing with polynomials. I can barely pronounce it. If you go to the sheet, you'll see the little adjustments that I've made. So far, it's just 2. Again, the whole point of this is to get these results super mechanical. We can scale later. So 2 is, I think, the basic lowest unit for that front loading idea. And that's what we're starting with. And so then the other addition is your first add is not until 1.5N. So again, this is assuming 2 contracts. And I'll have to see if it changes as N changes, but I was just playing with it on paper, and it seems that it's going to work. So the first add is at 1.5N, and then once you have that first add, you go back to that 0.5N adding. If anybody can come up with a formula that works, as plugging in, let's say, 4 contracts and an N of 8 or something, a formula that makes this a little simpler, I would greatly appreciate it. I'm going to bug some of my more mathematical friends for that, because right now I'm literally just putting it down on paper and going to adjust that accordingly. So keep an eye on this. I'll obviously keep you posted. But thank you again, OJ. This is going to save untold thousands in the long run, I think. So anyways, polynomials aside, we're going to jump finally. I don't know how long this video has been going. Let's see how long this video has been going. 6 minutes in, we're jumping into the price action finally. So I am going to have to drag the screen over. And we're going to start with looking at the macro chart, which I haven't even rolled over yet. So we're going to roll that over. It'll take 2 seconds. I don't have any studies on this. So we're going to go ahead and roll that over and go from there. So let me scrunch it up, zoom her in, and so we got going on here. So where are we at? We popped above the descending portion of that trend line, and we're now retesting the underside. So what does that mean? That means that likely, I shouldn't say likely, who knows what's going to happen, but it's very possible that we do see some type of rejection here. We'll be watching that closely. Yesterday's high, this little yellow line, did test it, and we saw a rejection then. So I think at least on the macro chart, let me make sure that's even what's on the screen here. Okay, nice. At least on the macro chart, that is, sorry, I keep moving this down. It's an imperfect webcam because my setup is interesting. Okay. Okay. I have to look around the computer to see it. But yeah, so it's really, I think, a game of those trend lines. And if we pop back above that one there, especially as VIX continues to descend, we'll look at VIX. VIX is in more or less free fall right now. Free fall from obviously a big rally, but I think the important thing to watch is what happens when we get back above that trend line. So we've already gotten back above the VWAP. And once we pop the trend line, that 4,000 area has those important SMAs. 4,000 is obviously an important psychological number. So we'll see what happens there. Yet for me, the main thing to look at here is what happens. In fact, I'm going to move the supply zone up a little bit just to make it a little more clear. What's going to happen around this important level as we navigate this trend line. Back above, I think we're going to see a continued bull move. And hey, we get another rejection, excuse me, that can obviously change things. So as I speak here, you're seeing a nice little rejection. let me put this down here. We'll see how deep it goes. Um, we haven't tested that prior day high yet, so it's gonna be interesting. I think first you want to look for a fake break above. So let's say we do pop it, a fake break above would be uh, back into kind of the range that we're seeing now. That might be a nice little short opportunity. So we'll have to see there. So yeah, so really on the macro chart, the only major thing I think is how we, at least for today, how do we react to this trend line? So we're getting that nice steep pullback. Looks like I'm going to get stopped out at 54.50 if they get down there, but that's okay. We front loaded, so instead of a $40,000 loss, it should only be about you know $400 to $500. So still relaxed, still nice, relaxed, enjoying polynomials, and moving on to the TPO chart. Maybe there it is. Okay. So what's going on in TPO land here? Bye. Sorry, just scaling this real quick. Okay, so you have this really big distribution from several prior sessions. That's a normal variation TPO look, by the way. So that's why we kind of saw that, um, you know, on a larger scale value, there's kind of a fight for that value, and now we're kind of popping above it. So this is going to become. I'm actually going to box this off probably. I want to see how the day develops, but I think as we look higher, we're now looking to clean up these singles again. It's all about that trend line on the macro chart. Intraday, we do have that trendy type look. Nothing dramatic because of just the downward pressure and just honestly the fact that we're already up. What are we up right now? Now we're up. Oh, okay, we're still just hanging around 70. We're already way beyond the expected move for the day. So I think that those targets are just going to be each of those singles correlating to, let's say, about 39 85-ish, I think is the first one. Really, it's the most important reference point around that area is yesterday's high. But hey, if we pop it, 39.85, and then again that 4,000 level is super important. Really for me, it's all about 4,000 ES as we look toward the rest of the week and perhaps later. And then you can see there's another single higher, another naked POC. So watch it what happens as we clean up the ugliness. But again, I think the eye is on 4,000, and I think that's the most important thing to watch for the TPO. On the downside, if we do go and retest that 3,900 area, that's going to be a really important spot. If the Bulls fail there, or I should say the Bears don't drop the ball once again there, then we might see that sustained downside. First target would be that 3,800, and this is all the new contract, by the way, if that wasn't already implied. So that's the TPO. Again, I don't really think the TPO is super important today. I think it's still really about that 300 area. It's about that yesterday's high and what happens around those trend lines. But I show you because it gives us that granular look, and we can just kind of see intraday. In fact, I'll show one more thing intraday. I think the pivot is going to be about 39.60 on ES. Obviously, no surprise, that's kind of where we're having this consolidation now. So just be watching from there. If we do pop in to that large distribution, you might see that sustained sell-off. I know that there is what I call an OJ gap. It's a bit different than the gaps I look at, but a gap between yesterday's close and today's activity in general. So if we do pop back in, maybe look for a fill of that, which will be, let's see, pretty decent decline all the way down to 855 on SPX. So the contracts are so messed up, I'm not even going to try to do the math. I think it's like 30 points at least, 30, 35 points. So what would that correlate to? That would correlate to about 30-ish on ES if we do see that gap fill. So those are the granular levels to look at. And then finally, we go to my favorite chart, which is going to be volatility and what's going on in volatility. To fix the scaling on this a little bit as well and get rid of some of these lines. So I find this to be important, that one to be important. As we descend lower, I'm just going to get rid of this one. I don't think we need that. There's enough pretty lines on this chart already, so delete that. And get rid of this one as well. The thing about trend lines is they're all about just kind of clarifying a look, especially in volatility. It is not necessarily technically friendly. And so we can see we're way down today percentage-wise. Something funny like, yeah, 11% decline in volatility. That is fear leaving the market, ladies and gentlemen. I do not care how much we went up in one day. The VIX itself is down 14.5%. Just, no surprise really. This is what usually happens. We have an attempted and pathetic run by the Bears that it leads to a choppy move down, and then the Bulls just come in and buy her up and erase all the fear in one session, sometimes two sessions, but it's usually the foil of the bearish activity, the slow grind down. I know that the old sentiment is elevator up and escalator down, but I think this is just another classic example of the opposite. So maybe you disagree with me. I complain about this to people all the time. Uh, but hey, the important thing is we can trade it both ways as long as you follow your process. And I don't know. I'm just trying to feel better about the whole thing. So yeah, so that's what we got on volatility. Again, not much to speak of on the bear side. I think until we at least get back into the channel, and then as we move down, there's a lot of room still to go before it finds some tentative support, if you can even call where volatility bounces support. So yeah, I mean, it just goes back to kind of the whole mantra that we have here at Routine Trader U, which is that as long as volatility, well, it's actually above it now, but so I guess now we're crystal balling, but as volatility probably descends more, gets back above, VIX gets back up below that 20 area, price gets back above the trend line, we go back to that assumption that the 2022 bear market was cyclical. So obviously now we still have to, the bulls have to regain that ground. Yet I just think the big move in volatility today is indicative of the likelihood of that happening. Again, price action is king here, so we'll see what happens as we get above that prior day high and move toward that 4,000 area. We're going to have another battle for 4,000. That seems to be quite a magnet, no surprise. And yeah, so that's kind of what I'm thinking of for the future. I just want to review the important levels today one more time. We'll go to the TPO chart to do so. If I can screen here. So key levels is going to be that 4,000 level. Actually, I think TPO chart is the incorrect vehicle for this review. The macro chart, watching what happens at that trend line at that 4,000 level, and as we go confront those major moving averages again. Nothing fancy, no hero stuff, just kind of watching that basic price action and then watching volatility. If we do get that push down for that fill of the SPX gap at 38.55 on the bear side. And that is all for this long and choppy briefing. I do appreciate you hanging out, especially you, Mr. Ernie, for entertaining me in the chat and reminding me of the beautiful phenomenon of Lagrange polynomials. I just realized that that's quite funny that polynomials keep coming back up in our lives. So they say that math is everywhere, and there's yet another lovely example. So, any case, I'm going to go on Twitter. I'm going to update those of you. Well, if you're listening to this, you know about the Twitch thing is going to be off for a little bit. I will do my best to be on Twitter. I'm not going to be as active just because my screenshots are more difficult on this computer, but also because I will be doing other things throughout the day. I'm not in the office, and so I will not be as active on there, but I'll do my best to, keep anybody informed if any major things happen. The newsletter is going to come out. I know it's late. We're going to go back to the normally scheduled 11 o'clock and earlier briefings today. I just had to figure out this whole technology thing, and we'll do our best, or I'll do my best, to make we'll call it the vacation office work just as well for you as a normal one. So yeah, please engage with me on Twitter if you have any questions, or just respond to any email. I will be very diligent to get back to you. And yeah, just any thoughts, any uh, recommendations. If you can figure out that formula, you will be my hero that we talked about in the beginning of the video for Barb. And yeah, you can also just hit up the comment section of this video. That works too. So I just appreciate any engagement that you can give. And also, if you did enjoy today's content, I know it's a big ask given the nature of today's content, but please give the video a like because that's going to help with YouTube's algorithm, no matter how choppy the routine briefings are. So that's all I have for you. Watching this trade, it did not yet get stopped out, so really excited about that. And we'll see if we can't get a green day today. And I hope that you get a green day as well. And stay classy, and cheers to you until tomorrow.